We are talking about the benefits of home ownership. And I thought that this would be another good segue as you start your journey here with this 60-hour pre-license course. Why in the heck are people buying properties? Why do people own the building they work in? Or why do people own farmland? Or why are people buying up all these houses? What's going on? Well, a lot of the content I just had you read through, I did not make up the data. I actually borrowed it from the National Association of Realtors. They do data on this on a fairly regular basis. And this is definitely a graphic that as a member of the National Association of Realtors, you could use, which is great for social media and things like that. Their website is nar.realtor.com. And again, realtor is not realtor, it's REALTOR. So nar.realtor is the website. And then I just, in their search engine, did benefits of home ownership and came up with this article. Education, I know, is a huge one, that people have higher graduation rates in homes that are owned versus rented. And we have more people go on to secondary education and get degrees, masters, and doctorates if they grew up in a home that was owned. Civil engagement is another one. Folks are more likely to register and vote or get involved with a community project. And then one of the other big ones was health. You own a house and a dog. You might just live forever, right? Supposed to have healthier lifestyles than non-owners. And then crime is another one where crime is usually lower in an area where homes are owned versus rentals. And even beyond crime, I'm sure that you understand the mentality and the focus of someone that owns their home and how they respect the property when it's theirs versus when they're a tenant, right? The tenant is maybe not usually quite as respectful. And if anything, I think that results here in the crime conversation. Now, something else that I wanted to draw out from what you just read was a little bit about the wealth around owning real estate and how that works. Statistically, I have read and been told that those who own homes are 35 times more likely than those that rent. And here's where that wealth gets accumulated. Number one, historically, we have real estate appreciating in value. So appreciating means the value goes up. Depreciating means the value goes down. Typically, your car, when you buy a car, the moment you drive off the parking lot, it's half of half, right? The value. That's typically how a car works, or a vehicle. With housing, it's a lot different because notoriously we've had this great appreciation year after year. We had a little bit of a hiccup around 2008 with the mortgage crisis happening. But other than that, historically, we saw values go up. And I know in the Iowa market in general, we've got some pockets that are higher, some are lower. But a number that I commonly hear is that we've got about a 3.5, maybe even sometimes 4% appreciation rate year after year. So I'm not going to get out the math. I'm just going to say this hypothetically. If you got a $100,000 property, that means next year it's worth 104. And then the next year it's worth 108. The next year it's worth 113. Then it's worth 117. Now 125, right? It starts compounding on each other. And just by owning and maintaining your property, the value goes up. Then in the meantime, you're maybe paying a mortgage down. And that creates this gap called equity. And when you've got equity built up in your property, you can do many things with it. You can hold tight and let it sit there. You can do a line of credit, possibly if you qualify. It's called a home equity line of credit. Against that, I know of clients that have done a home equity line of credit who have done improvements to the house, which just made the value go up even more. I've had them open businesses, and I've had them use it as a down payment to buy other real estate. I had a gentleman that I met one time that said he bought 10 houses just with the equity in his property as down payments. Pretty magical. Because then when we talk about using it to buy other properties or start a business, that's now what I call legacy living or legacy building. Okay. That's where that wealth starts to accumulate. And it's not just the wealth of appreciation for you, but it's also what you leave behind to your family or whoever's on your list as an inheritance. And that's why it is so critical and so important that we do things to maintain home ownership rights, so that we've got these benefits. But the other crucial part of it is everyone needs an opportunity to be able to buy a home. We've got to have fair dealings. I know we've got fair housing in place, but we still need to continue on so that everyone has an opportunity, because those that did not have an opportunity, especially prior to fair housing laws in the late 60s, you will see over generation generation weren't just put at a disadvantage when it happened, but again, for their legacy. And we'll talk a lot about fair housing as you get towards the end of your national content, and then a little bit more with the state content, but that will be a big part of some exam test questions for you as well. So we've talked about the equity. We've talked about the insurance. We've talked about the inheritance. We've talked about the equity of wealth building. But here's the other thing is the tax deductions. So traditionally, somebody that owns a property, they get to write off the property taxes. They get to write off the interest that they pay to the bank. So when you get a loan, you're charged interest. That's how banks and credit cards make their money for servicing you. They charge an interest rate. So with a mortgage or with a home equity line of credit, that interest that you pay to the bank is a tax deduction. So are the property taxes. And then I mentioned this in the previous video with you launching your career. Some of you may choose to work from home or have clients that work from home, and that is an in-home office tax deduction. You might qualify as well. I'll leave you to discuss that with your accountant, of course. So think about it. If you rent, you're not only helping the landlord pay down his mortgage, but he or she has all the tax advantages because they get all of these deductions. So if you got $5,000 a year in property taxes and another $4,000 that you paid in for interest on your loan, that right there is $9,000 that you did not have to pay income tax on. And you get to use that money to save or spend, right? And it's up to you, it puts you in control. So that's really the benefit of ownership versus renting, is you get all of the advantages, and that's why so many people go out and do it. Okay, we're going to get on to some content to help you now with the exam and starting to review a little bit about the process with the PSI testing center and then actual content that will be on the exam for you.